Hi, this is Brian Resnick, President of Resnick Wealth Management. I'm bringing you an important update about the economy and the investment market, so hopefully you can better your retirement portfolio. We continue to get a tremendous amount of questions from radio listeners in regards to, the economy, a recession, depression, the stock market dropping off, 55% like it did back in 2008. When we had all the credit crisis and so forth, and really, where are we positioned and what are we doing differently maybe than your advisor is doing. I want to say the first thing is Resnick Wealth Management is a money management firm. We are not an advisor. We're an actual registered investment advisor, much different than an advisor that works for a Wall Street firm or an insurance agent who sells annuities, mutual funds, and so on. We actively manage our clients' portfolio not only for upside potential and income, but controlling downside risk. I think too many investors have been really almost dished out inaccurate information, and that's really about hold on, things will come back, or the old buy and hold portfolio. There are times that you do want to sell investments in the stock market and reduce risk in your portfolio. I wrote about this in the newsletter last week. The average recession brings on a 40% dip in the stock market. If we are headed in another recession, like I believe we are from the indicators that we are seeing, the markets could easily be down another 30% from here. So the key question you have to ask yourself is, can you afford another 30% drop? If we're wrong, let me tell you how I look at this. I look at a teeter-totter effect. If you know how a teeter-totter works, which most people do, and the teeter-totter right now is even, meaning one end is just as even as the other. The way that I look at the risk side of it, meaning the market potentially going down a lot and us falling into a recession in the world economy, is very, very high. In fact, I talked about it Sunday on my show at 75%. On a teeter-totter, I think right now it would take no more than a feather, and we all know how light a feather is, to push the teeter-totter end down. On the other end of the teeter-totter, it would take a 50-pound brick to push the economy higher and the markets substantially higher. Meaning, I believe there's much more risk on the downside, substantial more risk on the downside, than the little bit of upside potential that may be there. We've seen a couple-day rally in the markets, and I believe this is a chance for investors who have been lighting up on equity-based investments, whether it's stocks or mutual funds or the like, is really a chance to do so. Our market trend indicators, not only in the short term, intermediate, and long term, are all signaling a sell in the S&P, which is our broad index that we use for that. Most of the emerging market economies, stock market, and so on, and developed markets are also in the same confirmed sell signal. We are in a definite downtrend. Until that downtrend reverses and we get some signal on our market trend indicators that it is clear to start adding back to risk equities, I am not going to do so. I believe investors who haven't sold yet or haven't raised some cash have a chance really to do so on this rally that we've seen. We've seen this rally happen 4 other times. We've traded in this range that I've talked about before repeatedly on my show and in my newsletter. We try to educate you on this. We're kind of bumping around that S&P 1120 level. We've tested that 4 times now, and we bump up to around 1200 level, and we kind of stop dead. One of these times it's either going to break above that and have a chance to shoot higher, or it's going to drop below that 1120, and in my opinion, then at that point we're going to go a lot lower. I look at our next resistance around 1050 and then 900 after that. Clearly we could see a 30% drop in any major recession that would come out. I believe the economy is very weak at best, and again I go back to the teeter-totter with a feather on the end. I don't see any problem with giving up 5% upside potential in order to hopefully protect against the 30% down. The odds, I think, are against the market currently, and I think investors would be smart and warranted to raise a little bit of cash and sit on the sidelines until really these trends reverse. You'll have plenty of time to get back into equity-based investments for the long-term growth potential that I think they offer, especially the emerging markets, but I don't think now is the time. If you are not getting any real advice, if you're questioning the advice you're getting from your advisor, if you're realizing maybe that guy who sold you the annuities and mutual funds at that Wall Street firm is really not a money manager at all, and you want to talk to us about our management, why we're different, how we can control risk, call us. It doesn't hurt to talk. Now, we do manage larger portfolios. We do have a special exception right now going for portfolios between $250,000 and $1 million, even though our average portfolio that we are taking currently is higher than that. We are making a special exception for certain clients that we are taking a small limited number. Call our office. Call us. Let's talk about your portfolio. Get a second opinion. Why go it alone if you're questioning the advice you're getting, or you're getting no advice at all, or you've repeatedly been told, hold on, things will come back. Has that worked for your portfolio? And I can pretty much guarantee most investors it has not. When are you going to stop the bad investment advice? Call us. We'd love to help you. This is Brian Resney. And until Sunday's show, make sure you have yourself an extremely profitable day.